please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. There have been some interesting opinions that have been coming through the day today. Former Reserve Bank Governor Raghuram Rajan spoke with CNBC and he says that central banks will have to raise rates gradually. He adds that the US tax plan could boost that economy. Hear him out.
You're a central banker. The great unwind is supposedly happening when it comes to the ECB and the US central bank. The stock market is completely unconcerned about it. Does that make sense to you?
Well, I think there's good news, which is what the stock market is reacting to. The fact that all the economies are now growing together, which hasn't been there for a long time. And of course, in the US, the tax cut, the corporate tax cut has been useful in terms of corporate profitability and so on. So some of that is a reaction to the good news on that front. But yes, you're right. At some point, the markets also have to recognize the fact that interest rates will slowly start climbing up. Now, the hope is it's going to be gradual, very slowly, that even as the Federal Reserve sort of unwinds its portfolio, the Bank of Japan will continue buying and the ECB will take some time. Now, all this is going to happen. The question is at what pace. If it can happen at a measured pace, the hope is that stock prices and other asset prices, whatever air there is, will leak out very slowly rather than abruptly.
Are you confident that's how it will happen?
If you look at past Federal Reserve tightenings, you realize that with the benefit of hindsight, the market always got it wrong. It was always too complacent about the pace of Federal Reserve tightening. Even if you look at what the dot plots tell us over the next year, they're telling us the Fed is probably thinking, at least at this point, of moving faster than what market expectations are. So at some point, there's an adjustment. Now, thus far, over the last so many years, it has been that the Fed has been overly optimistic about growth, and therefore the adjustment is that the Fed has come down to the market. Now, the question is this time going to be different? And the market comes up to where the Fed is. Also, Europe is growing gangbusters at this point, and unemployment has been coming down fast. Now, the European Central Bank says we are going to do it slowly. Don't worry, we are going to take it as it comes. But it could be that some of the growth data does surprise them on the upside, in which case they could move faster. I think the Bank of Japan is pretty much on hold, though they also have been making noises about the discomfort they have with extreme monetary easing. President Kuroda made a statement last month, and it is possible they could start looking at this sooner than we think.
It would be unbelievable change from what we've seen over the last decade. Barron's wrote an article recently suggesting that you should be the head of the U.S. Central Bank. What do you think of that?
I don't think they were serious. I do think that we have a very good Federal Reserve Chairman right now.
Jay Powell?
Jay Powell. Everything that I've heard about him speaks of his capabilities, and he has a vast amount of experience. I think the Federal Reserve is facing a very interesting world. The pace of withdrawal has to be calibrated to the growth of the economy. And it's something that they've managed quite astutely under Janet Yellen's time. So.
Well, I think Barron's probably was serious, but we'll let that go. What do you think of the mania over Bitcoin? Do cryptocurrencies have a future in the world, or are they going to give any competition to central banks?
I don't think they will give competition to the central banks as much as be complementary to the existing currencies. I think the parts where they are in they try to do something very different. For example, in some of the transactions that don't want to see the light of day, where people are trying to launder money or take money across borders, which the governments don't want to happen. I think if these currencies become large enough for that to be a big issue, governments and central banks react. You can already see across a number of countries, there is worry about the illegal side, but also about the speculative side. And a number of countries have come out in the last few days talking about these kinds of worries. I would think there is a future. There is a future, certainly in the technology, as we've discussed before, but also there is a future in a currency which is not necessarily under the hold of one central bank or the other. But Central banks in general have to be supportive because you have to trade out of that currency into the local currency to be able to do anything much with it in the economy. And so they have to be supportive of this process.
Keep an eye out on Sun Pharma. That's recovered all its losses from the low point of the day. And even Z Entertainment is doing quite well. Yes Bank comes out with its set of numbers. We'll have to keep an eye out on that stock. Well, 5 Paisa Capital, they've got the nod from MCX as well as SEBI to trade in commodities. So keep an eye out on that stock as well. But shifting focus to results then, telecom major Bharti Airtel will be reporting its numbers today. Ronit joins us now to tell us what to expect. Ronit, what do we expect here?
So Nigel, we're expecting another weak quarter for the telecom companies. I'll start with the revenue. We're expecting the revenue downtick of around 4%, largely because of the IUC cut, that is the interconnect usage charge, which was cut by 57% in September. That will impact revenues. Moving on to the EBITDA, we're expecting the consolidated EBITDA to be down by around 5% to 7,500 crores, largely due to the increased competitive intensity as well as the launch of unlimited plan, which is impacting the EBITDA. Moving on to the PAT, we're also expecting the PAT to be down by around 21%, largely due to the above factors. Now moving on to the African business, we're expecting a slight downtick in the African business of around 1.3% at 5,000 crores. Moving on to the margins, but we're expecting an improvement in the margins led by cost efficiencies. Another key thing to watch out will be the average revenue per user. Remember, in the last quarter, the average revenue per user came around 145, which is one of the lowest, and we're expecting it to go even lower to around 127 to 129 rupees. So on the back of this, the key thing to watch will be the ARPU. Back to you.
All right, Ronit, thanks very much for that. The other one to watch today will be Ultratech Cement. Nigel, numbers expected post-market today. What are you penciling in?
No, Sumera, it's going to come lunchtime. It's going to be at around 2 p.m. is when I'm expecting those numbers.
So you can call it a day early today.
Yeah, it's going to be, I hope so. So we're looking at around 2 p.m. in terms of Ultratech Cement's numbers. Well, the stock has gained considerably in the last 1 year or so. It's trading at near all-time highs. So in today's trading session, it's under some pressure. Remember, trades at an EV per ton of roughly around $200, $210 per ton. Remember now this quarter, if you compare it with the base year, in the base year, there was no JP Associates numbers. This year, this quarter around, there will be that JP Associates number. So not totally like-to-like comparison is what we could see. In terms of revenues, we're working with around a 27% growth. Bulk of that will come in because of higher volumes. Volumes should should come up by close to around 20% approximately. Should clock roughly around, we're working with a number of around 14 million tons approximately. That's the total sales volumes. Why will we see such a bump up in terms of sales volumes? One factor being, in fact, that we're going to be seeing, JP Associates sales volumes as well getting included over here. If you take a look at Ultratech Cement ex JP Associates, well, in fact, then the growth will be only around 6 to around 7%. We're working with the assumption Associates acquired assets. Those plants will start functioning at roughly around 40-42%. Remember, in the first quarter, it was at around 15%. So gradually, that's likely to move higher. And by quarter 4, the management had told us that, in fact, they're looking at roughly around 60% in terms of capacity utilization levels. Operating profit, that jumps up by close to around 19%. But margins will see some compression. Why? Because you're consolidating JP Associates, where JP Associates EBITDA per ton is not as good as Ultratech Cement. So that's why, in fact, there'll be some compression on the margins. And they also use a considerable amount of pet coke. And we had pet coke prices spike up as well as a pet coke ban. So both these two factors will play on there. Profit number comes in lower, Sumera, by around 24%. Why? Because, in fact, we are likely to see higher finance costs on the back of consolidation of 10 to around 12,000 crores coming in from JP Associates acquired asset.
All right, thanks for that, Nigel. Adani Ports is the other one that will be reporting numbers. Anisha, what are the expectations there?
Well, yes, Q2 was particularly weak for Adani Ports given the weak traffic volume that we saw last quarter, though it was just the SEZ income that gave some bit of base or color to the numbers last quarter. But this time around, we are expecting the traffic growth to come back. That is what the management had indicated post the Q2 numbers. In terms of the revenue, we are expecting a growth of around 8.5%. The EBITDA is expected to expand by 17% given the margin expansion that we are looking at, 65.8% versus 61.3% reported last year. However, the PAT growth might be a bit limited. It might just be up around 1% given the tax benefits that were there till last year have been taken away, and that's the reason we might be looking at a limited PAT growth. Now, in terms of the volume growth, we're expecting a number of 12 to 15%, wherein the container volume growth can be strong at 20% led by the new ports. But other than that, the bulk cargo volume are expected to come up quarter on quarter. Given the last quarter, there was a bit of downsizing when it comes to the Dhamra operations as well as the HMEL refinery. Other than that, if you look at the key monitorables, well, the volume guidance is of importance. Remember, post the Q2 numbers, the management did not reiterate the guidance of 12 to 14% volume growth. Let's see whether they come back with that guidance or not. Other than that, the management had alluded to impact of GST on the volumes last quarter. Any word on that would be looked forward to. And the balance sheet issues remain important for Adani Ports given the weak health of the other group companies. So that also will be something to keep an eye out on. Back to you.
We'll keep an eye out on those numbers then. But sticking to earnings, Tata Sponge put up a strong show in the Q3. The profit number, remember, surged by nearly around 200%. Margins as well expanded. Sanjay Patnaik, the MD of the company, says he expects the net realizations to hold at these levels. Let's listen in.
Yes, it has been an excellent quarter. We had recorded 22% volume growth and sales growth of 25%. And supported by this, the NR also has increased in the marketplace. So therefore, we have posted this good number. We are in discussion for putting up a long product steel plant. And we have got our board's approval for applying for the environment clearance. And it is work in progress. We are discussing and finalizing the process route, the asset configuration, the size of the plant, and the product mix. So it's work in progress, and I would think that once it is finalized and all, then we should be trying to put up a steel plant.
Then we are climbing. Actually, we saw a bit of a dip intraday, but that's quickly been bought into. Sun Pharma spikes up as we speak, and we have Maruti as well. That's doing quite well. So both the intraday stocks should come up for you. And ITC, that's been holding one end up, continues to hold one end up. But Manisha Gupta joins us in the studio. Manisha, what do you have for us today?
Oh, a lot of gold and wish list from the sector as well on what they are expecting really from the finance minister during this budget. The jewelry companies have been in focus as reports indicate that a Niti Aayog committee has made recommendations in their 256-page report to the Department of Economics Affairs to bring the import duty on gold to zero from the current 10%. The committee is also said to have recommended reducing the GST on gold from 3 to 1%. Sanjeev Agarwal is CEO, Gitanjali Export Corporation, and he joins us now to talk more about that and, of course, on what he's expecting from the budget. Sanjeev, hi. It's a 250-page report, a very comprehensive one. But the duty cuts, as mentioned, do you really see that as a possibility and as coming? Because Finance Ministry, for the longest time, really has been hesitant on that.
You have to look at the Niti Aayog report holistically. It is the first really policy paper come out by the government on the gold sector, which is so large. It's a 5.3 lakh crore industry in both domestic and exports put together, has 50 lakh workers directly employed, the largest sector employment generator, and yet there's never been a comprehensive policy covering every aspects of the jewelry trade in India. And this is a starting point towards that. The important point is not to look at the cut from 10% to zero as far as customs duty is concerned or reduction in GST is concerned, but it has to be the reasoning behind all these policy recommendations. And the reasoning is very simple. As you know, within the jewelry sector, the diamond sector has made a lot of headway in terms of being the largest manufacturer and exporter of diamond in the world, accounting for 90% in terms of market share as far as number of stones are concerned, 65% in terms of value. In the case of gold jewelry, silver jewelry, we're still lagging behind vis-a-vis the technology that we have, vis-a-vis the historical advantage that we have as far as exports of jewelry is concerned. Globally, the jewelry industry is about 4 times bigger than polished diamond industry, and hence the policy is talking about all enabling factors to make sure that potentially any small retailer, manufacturer sitting in Satara or Ratlam or Coimbatore can potentially be an exporter.
It's a recommendation clearly which is positive for the industry. But Sanjeev, what also are you expecting this time around from the budget as a gold sector industry, a gold board and a gold comprehensive policy actually getting through?
I would expect that there should be some announcement as far as the gold board is concerned. And why the gold board? Because as far as gold is concerned, bullion and jewelry, there are more than 8 different government arms which come out with regulations, which very often are at cross purposes. So, and there's no ministry, unlike a chemical ministry or textile ministry or oil and gas ministry, there's no ministry representing the gold and jewelry sector. Hence, the first most important starting point is the gold board, which I think would shape up fairly quickly. And the idea behind the gold board is that you have representation from commerce, finance, DEA, RBI, DGFT, customs, excise, GST, etc., all on one platform discussing issues so that the final outcome is not knee-jerk regulations but a thought-through process.
Sanjeev, another policy action that really demands a lot of attention, of course, is the free trade agreement that we have from various countries. And we've seen that at a disadvantage because we saw 0% duty imports coming in from South Korea. Do you see this duty cut actually being done or being talked about to ensure there is no FTA advantage or disadvantage there?
If it is in the range of about 3% customs duty, then the FTA advantage almost disappears because the cost of paperwork and logistics, etc., doesn't make it very exciting. When there was a 10% differential, it was a huge advantage. But at a 2-3%, it's reasonable. It's nothing very exaggerated, and I think one can live with it.
All right, Sanjeev, we'll let you go at that. Thank you so much for joining us with those details. So clearly, Nigel, there's a long wish list there, and there's a 250-page report from Niti Aayog asking for a lot of things for the sector.
Well, nothing wrong in wishing, what's it?
Absolutely.
Okay, all right. Then the Nifty has recovered from the low point of the day, so that's good news. The mid-cap index as well has recovered a tad bit. The start today is the Nifty Bank holding with a gain of around 500 points.